I'm Victoria Schaefer, Senior Membership Manager at HFTP, alongside Carl Weldon, HFTP's Chief Operations Officer in Europe, and our guest speaker, Paul Nisbett. Before we begin, I will quickly go over a few items about the format of today's broadcast and the Zoom platform. First, this is a conversation, and your input is important and encouraged. Your microphone is muted at this time to avoid background noise. However, please unmute your microphone at any time by clicking the microphone icon at the bottom left of the Zoom window, or use the chat feature at the bottom of the screen to share your comments and questions. HFTP Hangouts are educational discussions offered in a non-sales environment. Product promotion and sales pitches in the presentation and through the chat feature are not allowed. Also, HFTP's antitrust statement has been posted in the chat. We do have a code of conduct which we require everyone to follow at HFTP Hangouts. We are monitoring the chat box and will call on you to ask your questions for the group, or we may ask on your behalf. Our intent is to respond to all questions, but if we cannot, we will try to follow up with a response through email. If you need technical assistance, please submit a chat and we will be happy to help. This Hangout is being recorded, and a link to the recording of the discussion will be available at the HFTP website soon. After Carl's introduction, Paul will begin the conversation today with some discussion and insights, and then open things up. Again, interaction is encouraged, and we want to have a great conversation. Over to you, Carl, to start the discussion.
Thank you, Victoria, and hello again, everybody, and welcome. As most of you know, we've created this European Hangout, especially for our European members and stakeholders, every other Wednesday at 3 p.m. UK time, 4 p.m. Central European time, and of course, just in time for our US members coming in early as they wake up and have their coffee. This is our 13th European Hangout, and we have a planned program of topics concerned on an internationally wide basis with the aim that these conversations and Hangouts will help enrich everyone in the current environment. This is the third HFTP Europe Hangout of this season. We do have a planned set of topics for everybody. Thank you to my mini advisory board of Ian Miller, Luis Delomo, Henry Rollings, and Michael Hayward. So a big shout out and thanks to them. The topics coming up will include the Wi-Fi 6 standard and its impact on the future of wireless and hospitality, remote and contactless technology, that'll be the 2nd of December, retail versus hospitality tech, what's the difference, via Karen, the editor at the Retail Bulletin, on the 9th of December. And other topics include, is it the right time to let artificial intelligence help with telephony, crypto blockchain, future workspace, and corporate travel standards. Plus, a little bit of a special at Cyber High Tech on Wednesday, the 28th of October, a special Europe Hangout, Tea and Technology in the middle of Cyber High Tech, an interview with Barry Thomas, the VP for Technology for Europe at Rosewood Hotels, but he's based in Los Angeles, and he'll be having a chat with myself and Ian Miller about the experience of the move and how he has found the transition of being a Brit abroad. This is listed on the Hangouts website, but has limited free attendance. But after that, we will be taking a little break while Cyber High Tech is open until the 2nd of December. However, just to remind you, all of those of you who don't know, on December the 23rd, we will be hosting a very informal hangout with my Central Advisory Board team, and mentioned earlier, where they will answer nearly any one of your questions, and where we intend to kiss 2020 goodbye. So please join us for this special, when Christmas hats and pullovers and Arsenal shirts will be allowed, and they're all mandatory. I should also point out there are already 7 recordings from our previous European Hangouts via the resources page in our Hangouts area on the website and our YouTube channel. This would be a great resource for anybody in hospitality, but especially for students studying hospitality. If, however, any of you do have any topics and suggestions, then please do let us know. Now, today's speaker that we will hang out with is Paul Nisbett, CFO of Valor Hospitality in Europe, which is a company with 30 plus hotels in the European region. Paul has been in the industry for some time now, since I've known him for sure, in commercial and finance roles with companies such as Red Carnation, Le Méridien, Malmaison, Principal Hayley. Paul and I have known each other for some time. In fact, Paul has been to every High Tech Europe and led the CFO discussions at the CIO and CFO summits every time. And we were on a discussion panel about, it seems like years ago, but it was only 4 months ago. Now, the reason Paul is with us again today is we wanted to move the finance discussion on from the immediate past crisis that was right upon us in front of us in May, 6 months ago. And now we want to look to the future and what the future challenges are for financial leaders after the original reset. So looking forward, as Paul, a finance leader in our industry, talks us through his views on these aspects. Paul, over to you.
Thank you, Carl. Yeah, what I wanted to do today was really update on for when we talked in the very early part of lockdown, where we've got to and where we see the challenges going forward. I think really 3 or 4 subjects today, obviously forecasting and budgeting, cash flow, and then the other area really about statutory accounts today and the challenges coming forward, and then really open the floor. So the first thing really is when we first chatted back in the spring, we talked about how do we forecast and what do we do? And I very much at that time, it was very much of us leading the hotels, guiding them into their forecasting, and really driven on that basis because how do they really know what's coming? And that was very much our stance as we started, was very much about giving the teams in the hotels as much information as possible and a steer, as we really didn't know when we were allowed to come out of lockdown, what we would be allowed to offer, and how do you forecast that. But as we got through, we had all of our hotels actually open prior to the government allowing to take non-key workers. So we had a lot of our hotels providing key worker services. We started to build up trends, and really then the hotels took back control of their forecasting and their trends that they could get to see. And it was very key because very much from a central point of view, we're not seeing the phones ringing, we're not seeing that action every hour of the day where the hotels are. So very much shifted it back to the hotels driving their forecasts. And the key thing that we've worked with them on is around trends. We look at daily and weekly pickups, we look at, and then we communicate across the portfolio, because certainly as we went into the summer and the staycation, we exceeded our forecasts, and none of us knew at that time how much demand was coming through. And then as the country locked down traveling abroad and started the 14-day, when you come back and you were being isolated 14 days, what we saw was a second surge of hotel bookings as people realized they couldn't go into Europe, so they were staying in the UK. So again, you were feeding that information through and guiding the hotels and getting their information back. So the trending daily and weekly in terms of what was happening with pickups has been key. And the second part of why it's been key is because as you're communicating with investors and you're actually looking 6 to 12 months out by hotel, in terms of what's picking up and what was the trend, what you had on the books in 19 compared to where you are today, it guides the conversation of why your forecast is looking like what it is. And if you're sitting there with 5–10% on the books into the winter, you would normally have 30 to 40%, and they can see every week it's not moving. You're able to, the conversation becomes easier, and you can speak to them about that and very much guide them in terms of, well, actually, we are being pessimistic here because actually nothing's happening, and you could see the dropout as the government changed the rules. And a lot of the times, the forecasts are built on one basis, and suddenly you're having localized lockdowns, you're having, are we allowed to open up our meetings, events? And suddenly that we think we're going to be allowed to open up from October, and suddenly then it's, no, you're not, and you can't do these events. So the more clarity you've got of how your forecasts are being built and the assumptions in there, then the ability to talk with investors, with bankers, and guide them in terms of what's happening and why, from a bottom-up perspective, your forecast is built, it actually allows them to engage with you and understand. Because what we saw was certainly July, okay, pretty much where we thought it was. August, stronger. September, not as strong in terms of pickup, but we had a good base on, and that kept going forward. But as you start looking to the local lockdowns and you start looking to Christmas, and I'll touch on Christmas in a second, you start looking into these areas and you're having to make forecast assumptions, it's key that you've got the foundation blocks to talk to them and talk to investors. So one of the things we do with our forecast and when we discuss it is we put in our risk and opportunities and we talk about, well, this is what the risk is in the forecast going forward in certain months. This is the opportunity. So that they understand, and it comes to Christmas, everybody sitting here at different times has had assumptions of what's going to happen for Christmas parties, for the Christmas season, for New Year. And what we've done is we've just highlighted, well, this is what we would normally do. This is what was budgeted. This is what our forecast assumes. And then as changes happen and things get locked down, or we're not allowed to do certain events, or the 10 p.m. curfew comes in, you can just update those assumptions and you can feed that back out so that everybody understands what you've built in, and actually, you know, then how do you drive that into your numbers? Because that's been one of the biggest things, is the total unknown. And you're going forward, you know, you're going forward with our conversations in July and August, where we really can't determine the corporate demand until September, till people come back. 2 weeks later, we're then told we've got to go back and working from home, and a lot of the corporates are shutting their offices. So the more you've got that information, the more you can guide your assumptions, and you can feed those assumptions through to your investors and to your owners and to the banks, then the more they can understand and judge for themselves the swings that are happening. So really, in terms of forecasting, as I say, when we sat here in March and April time, very much we led the forecast, because very much, you know, to sit down with every GM and say, well, what do you think is going to happen, would have just been, you know, would have been a train crash compared to actually saying, well, this is what we're assuming as a whole. So actually, what's different for you as a percentage? And then as we move forward, really taking the control back to the hotels, but still having some guiding assumptions that we talk about, the likes of Christmas, the likes of corporate demand, etc. And understanding that through and being close to it, because day by day, there is so much going on with lockdowns, potential local lockdowns, you know, Scottish Government announcements today, you know, Chester, for one of our big areas in that part of the area we've got there, talking about whether they're going to go to a short, sharp lockdown. And all these things are affecting the ability for you to forecast. So I say very much using those guiding principles to how you take it forward, and knowing that every time you're constantly re-looking at this and adjusting your forecast and staying close to what's happening in terms of picking up pace. That itself drives to then the cash flow. And we have 3 different cash flows that we work from, which is the daily, actually what's happening. We look at a daily 90-day cash flow, and then we look at also to a monthly cash flow. And they all sync together, but to be honest with you, that point around the 90-day cash flow has become more and more key than where before, where you've looked at the actual trending on a monthly basis, because so many swings. What we've found is with the mix change between corporate and leisure, we found very much that our payment profile has changed. We've got a lot more cash being paid very quickly because of individuals paying by cards, etc., when they leave. So again, you're having to reflect that very quickly into your forward cash collection. So it's really key, and at the moment, cash is king. So using that in terms of what is actually in your bank that day, but updating that 90-day forecast. We update it 3 times a week, and we use that to guide our long-term forecasts, where we go out 12 and 24 months, that we provide then into the investors and to the banks. But I say probably the focus more has been around that cash forecast than it probably has around the pure P&L forecast, other than saying working with the P&L forecast very much around the trends, the bob, the pickup, because actually it's really going to be actually looking at forward point and understanding when you've got pressure points coming. And it is, and as I say, using and living with that document. I mean, the changes the government make around VAT, and then not only the additional 5% reduction affects obviously your cash flow, but also then the payment you've got for the quarter of the second quarter of 2020 that were due to have to be paid by the end of March 21, that now can be deferred for a following year. So all the time updating your cash flow to reflect that, because obviously that will have a major impact in terms of the demand for cash where you need your loans, etc. So very much continually changing and reflecting that in with the government changes, as there is a number of those changes have so many different effects into where you go. It's also key budgeting time. As we sit here in October, a number of the businesses' budget season is with you. And one of the things is actually, how do we budget going into 2021? And look at and say, well, actually, what is the assumptions? And do we have to make any assumptions going forward? When is it going to change? The key thing for us in terms of looking at that is been looking at what information is in the market as well. So when you're going forward to present to owners and to investors, if you've got market information that can guide you and you can reference to it, then very much that needs to be up front. STR have done a really great piece around the months, the quarters and the years in terms of their expectation for London and the regions. And though it's not going to be the Bible for what you use because each of your businesses are different, but by having that as a frame to how you then look at your forecast and your budget for the next 12 months is key. And I think it gives some sort of credibility to if you feel that the first quarter is going to be very much like the last quarter of 2020, and then what you think the second quarter, third quarter, and into the latter part of the year is. And I think we've used that and we're using that as like the underpinning of where we see 2021. And then we look at the key dynamics for each of our businesses in that period. We have a number of hotels that are pure corporate. We have a number of hotels that are heavily involved in meetings and events and weddings. And we've got 3 of our hotels that are tied to major conference centres. So those different buckets of hotels require different assumptions for budget 2021. And so we've tried to guide that through and build our budgeting based on that. Again, we know that 3 of them are Nightingale style hospitals, the big conference areas. They're not going to come back until April at the earliest. So again, you've got to take that into account for budgeting and explain that in your assumptions through. And then you look at others where we know there's very strong conference events towards the end of the year, and again flagging those. But from our point of view, it's really been like, right, this is the assumptions we have. Being very honest in a budget. You know, there's going to be a lot of the budgets are going to be probably lower than owners have expected and investors expected. But I think if you've got the foundations of assumptions and you're giving those clearly and you're upfront making the assumptions of where you are, then at least they can understand. They may not agree, but they can understand on why you've built your budget on this way, what things you've taken into account, and then it gives them a good starting point to discuss items, to debate areas where everyone's going to have different opinions of when does the vaccine come back, when do people start traveling again, when are we going to be allowed to open up our meeting event areas, and various different aspects like that. So I think the more you can take people through the story of how you build in your budget and the effects it's going to have and the key drivers, then it does allow everybody to buy in. The other area we've done and we've had the conversations is, this is the budget, but assuming we reserve the right, whether it's the end of Q1 or the end of the half year, to rebudget, because we'll, you know, when we sat there in May, June, July, and we felt that the final quarter was going to be stronger, we were going to be allowed to open up our conference areas, to now be told that we're in a 6-month period where nothing can change. All of those things massively affect your short-term forecasting and clearly your budget assumptions. So the one thing I've always said, and I've said it last time, is guarantee whatever budget we put together, whatever forecast we put together, it's going to be wrong. But if you've got real quality information of what your assumptions are, how they've been built, at least it allows people to understand, to challenge, and then to come back and say, right, okay, we did think by April we'd be able to do this, we can't. When do we think that now? Is that going to be 3 months later? Do we just move our assumptions from now for another 3 months? I mean, a lot of people, you could look at what you felt would be Q2, and I'll come back to STR. SDR's data that we got for the regional UK was done in August. You could make an assumption now to say that everything slipped 3 months because of the government's ruling. And if that was the case, you could easily move what is quarter 2 to quarter 3 and quarter 3 to quarter 4. And that, no one's saying that's right or wrong, but at the moment, it's probably one of the best guesses you would have in terms of how the assumptions are going to build and how do you build your budget. So really, coming to that point, probably the best way on a budget to go through there and what we could do. But as I say, the more you can put your assumptions down, the more you can link to external market data, then the more that when you present your budget, there's a really solid foundation to how the numbers have been built up. Next area, which I think a lot of CFOs and FDs have been challenged this year, is around statutory accounting. Depending when your year end is, ours was December, which means that COVID-19 is a non-adjusting factor in the statutory accounts. So you've got to look at various different things. We were far down the road with our statutory accounts, and then you come to the point of actually your disclosures. And from our point of view with the investors, we had secured our bank funding, we just secured our covenant resets, if everything, but still coming through to then the proportion, and we've just finished the sign off of our statutory accounts for the year of 2019. You've got a huge amount of disclosures required around going concern and post year end events and subsequent events. And these conversations can't happen a week before signing. These conversations need to happen early, and they need to be debated. You need to be debating them and working with your auditors. We work with KPMG and Colin and the team. We've spent a good month working through all of these disclosures, trying to get the right wording, engaging with the owners in terms of explaining why they need to have this, and obviously it's in the reasons for these items, because when you come to certainly the going concern, there is so many unknowns at this point, and obviously as directors they need to be signing off on those. And that was probably the most challenging part of getting the statutory accounts signed, was explaining to directors and investors about the disclosures and working with them to understand that the events of whether there be a second lockdown, how could you forecast going forward for the next 12 months with clarity, even though they have put fresh funding in and the banks have given you everything you need, still required further disclosures. So don't underestimate that period of time and the work that's going to be required to get that past the post as you come forward. And though Companies House have allowed that extension due to COVID, if you haven't worked with your banks to extend that period, you still have your bank deadline for filing and for providing them accounts. So don't take the foot off the gas, assuming whether actually you haven't got to file for a period of additional months. If your bank agreement still requires you to file on a certain date, that is where you're going to be tied to. So make sure you're on top of these items as you go through this year, because it is challenging and the disclosures are more. And when I come on to that, I'm going to touch on really the next part for everyone to be really aware of as we go into the future of the statutory accounting going forward. There is a number of additional requirements that are coming forward, and as I said, going concern for 2019, early 2020 accounts that people are filing now in light of the next 12 months is challenging, and you need to work on it. But from an audit perspective, the requirements that the auditors need to do for going concern for next year's accounts, so as we go into the next cycle, is even harder and even more detailed. So the sooner you engage with your audit partners and your audit director, etc., and work with them in terms of get ahead of this, it's going to be key, because the requirements this year were tough, and certainly with the inability to know what you can do. Are you going to be able to open? When can you open? When are you going to be able to do certain certain operations, all of those affecting today. But as I say, when you come round to the following year and the audit requirements get tougher, you're going to find it even more difficult if you're not ahead of the game. So certainly that's going to be a big requirement for you. I would additionally, valuations, there's been a number of webinars in the last few weeks, and there's a number of conversations and a lot of articles being written at the moment. How evaluations going to be done. So, you know, need to be thinking about that now and not thinking about that down the road. Engaging with the valuers, engaging with your investors, shareholders, engaging with your audit partners now about how is valuation, how are you going to value your portfolio, what's required, is it required? Because with so few transactions and the period we've just gone through with pretty much, you know, the hospitality industry shut for a period of time, it's going to be very difficult, and it's going to be a big challenge to get your accounts signed off in 2021 and for the year of 2020 or so into 2021. You know, what is the valuation going to look like? What is the implications of the valuation into your accounts going forward? So from my point of view, I would say very much about engaging in these conversations early, working with your audit partners early so that you can get your plan, you can get all of the relevant parties around the table early as possible, because these things are going to be the things that are going to cause you time pressure, not your accounts, but the actual way your disclosures, these are aspects that are going to pick up for you into your next set of accounts. And a bit like with the IFRS 16, the earlier you started, the earlier you got in the conversations and worked, you'll find that actually you've got a better chance to hitting the deadlines and the key agreements you've got. The other area we touched on when I spoke way back earlier was looking at enhancing automation, enhancing your systems financially. And I know there's a question been asked about what's the view about automating accounts payable. You know, it is not, and it's not something we all look forward to, but our industry has shrunk for a period of time, and you've got to realize whatever that period of time is. And we were in a conversation earlier with one of our friends on the call today from Chicago, and his restaurants are shut, and it's going to be a long, hard winter. We're all recognizing that in our industry. And unfortunately, that means we're going to be able to afford less people for a foreseeable future to run our accounting, etc. So the more we can look at the tasks, we can look at the automation that we can do, we can look at what controls we need to have and how do we manage those controls as we go forward for the next 12, 18, 24 months is going to be key, because unfortunately the size of the accounting teams we had compared to what we can afford going forward are going to be very different. And we've spent probably a lot of lockdown. I did probably chat when we were all chatting in the early part of the year to say projects we've been planning, I was driving the teams hard on early. We've made huge headway into automating and integrating a lot of different systems. We have 5 different PMS systems that all have to feed into our accounting system, our procurement system, and our payroll system. So we've restructured quite a bit to allow us to bring these systems together. And on the basis it's the right thing to do early, but actually looking at where we are now, it's the route we're going to have to do to be able to provide the service we need to offer to the hotels, the service we need to offer to our investors. So I think if people aren't down that route and they're still, you've got to challenge all of your manual processes, all of your systems that aren't are integrated and don't interface. This is the time now where you've got to get on with that, because you're just not going to have the people and you're not going to have the time as we come out through the other side, just because we're all going to be running at such a lower revenues and cost basis than we have before. And so very much, the question, would we integrate and would we automate our AP system? We have, we have our accounting system. We use a procurement system that has an EDI package that basically brings all the invoices into our accounting system. And that covers something like about 97% of all of our food and beverage. A good proportion of our maintenance and a lot of our operational costs all come through this system. So our actual manual proportion of invoicing is very low. And you know, we have been looking at some systems we can use for those to be scanned in, and then obviously automated from that perspective. So yes, I think everything's on the table to look at how can we be efficient. And obviously our aim is that our accounting team, rather than becoming processing, it moves to actually using the information to guide the hotels and to support them commercially. And that's been probably our last 18 to 24 months is the way we've been going. And I think all that's happened is the COVID-19 has made that come forward quicker, and we've had to work quicker and deliver that project probably earlier than we expected. But with the fact that the hotels were shut for a period of time, we had that opportunity to do it with very few transactions, and to test it in different environments as we went forward. You know, say we weren't running the 90% occupancies with the high demand in the summer while you're doing these changes. We were able to do it while we had low occupancies and a number of hotels closed, or even all the estate closed at times. So it's allowing us to do and to test in that environment. And I think still, unfortunately, going forward for a period of time, we're going to have low occupancies. So it is probably the best time to do the integration and to do the testing, because the volumes will not be high, and then it allows you to manage any corrections, any adjustments, to review the work you've done through that period of time. Carl, have we got any questions we want to pick up on with everyone?
They reckon every conversation these days start with unmute yourself first. So here we go. So yes, a number of questions. You've answered the one about AP. There's a question come from Daniel Johnson of Venza, and because obviously the finance people have to report a lot of different things, not just finance. So Daniel, if you're there, which I saw you earlier, would you like to ask your question of Paul?
Gosh, I can't remember how I worded it. You have it the way I don't remember.
Would you like me to read it out for you? Does the attention to compliance does the attention to compliance related issues such as GDPR and PCI DSS change during times of crisis? Should it is it a crisis time to devote energy to address shortcomings and other priorities that may predominate? If you'd like to expand on that.
Yeah, I'd say certainly around PCI and DSS, it's been very interesting. We've got a number of hotels that now are cashless. Just people are not willing and are not bringing cash to hotels. And so when we reopened a number of the hotels, we actually took that scenario where we said, actually, we're not going to take cash and it's been card processed. So a lot of the focus definitely has been around, obviously, the changes in legislation, but also the focus around the need to make sure our controls are in place as we've moved into this world. I mean, a lot, when you go, just even going into shops now, there's a lot of people still very unsure about taking cash from you. So everyone's now, whether it's contactless or it's using your cards, etc., there's been a huge amount of change, and probably that's one of the things that probably has gone under the radar in terms of probably the use of cash. If we actually look at it across all retail and hospitality, cash is disappearing. I mean, we look at it and how much cash are we banking? And then I've had the conversations with my team just saying, well, do we need G4S coming and collected? What are they collected? So those kind of things are, yeah, that has been a massive change in that route. And I think, you know, firstly, that's an area where the focus around PCI compliance and the changes of legislation that was due in September, and a lot of brands, we've had a lot of brand communication around the training and the compliance. And I think it probably initially slipped a while because so many people were furloughed. But I think as people have come back from July and August, we've suddenly seen a lot more questions being asked of us, a lot more task work being done. We didn't drop it at that point. I mean, we knew our deadlines we were working on, and we've been probably ahead of the curve on some of those aspects. But the client has already, you know, as I said, there just isn't the cash in circulation. So the fraud risk, and I mean, we've been working with our TMB, our IT supplier, a provider, really around a lot of controls. We spent quite a bit of time looking at all of our security because of the amount of fraud that's been tried, and we've seen a number of examples, and we've been briefed about a number of examples of things people have been trying. So again, we've done a lot of work around the securing of our networks. We've done a lot of work around the PCI. GDPR hasn't gone away. I think, again, from a perspective of Daniel, probably a lot of people were furloughed, and a lot of that period of time when your business was shut, there's obviously risk. We, from our perspective and with our insurers, we still had a core team in our properties 24/7 that was required by our insurers. So we didn't lock the doors of our hotels and board them up and basically no one turn up. But there is a number of examples of where that's happened. I've been in London, I've walked around and some of the hotels are literally just boarded up. And you think, well, okay, you know, how secure is what's going on in there? And so there is risk around that data, but I think we've kept focus on what our plan was, what programs we were working on from a GDPR perspective. We've, again, as I say, been very, very aware of potential fraud and a lot of requests for information. And as I say, with our IT suppliers, we've been very clear working through how do we ensure we don't become a target of some of these fraudsters, or whether it is about data, whether it's about payments, etc. And when we feel that we're at risk, we've put in place further controls to support us. So I don't know, Daniel, how have you seen it? Have you seen a marked increase of issues through this period?
Well, I think there's been kind of it's been a bit of a crossroads for some groups. They're taking this opportunity to button up their processes and their procedures, whether it be making sure people are they've got the operating practices in place and the communication strategy in place. They've got their disaster plans. They've got, you know, they've dusted them off and made sure that they're in they're current, and so taking advantage of the crisis, if that doesn't sound sadistic, but taking advantage of the crisis to address some things that maybe had taken a back seat for some time, which I think is a healthy approach. As an organization, say, you know, just attack. We've got some time on our hands. We've been wanting to address this. We want to. We've been using this. We've been managing our own firewall. Let's get somebody that's an expert on it, so we don't use the staff to do that because it's expensive. That kind of thing. So making that shift it can be a time-consuming project, and when your time is so pulled and so many other projects, it's hard to do that. So that's one side. That's kind of the healthy side. The other side is like, we don't know what to do, and so we're just going to kind of sit around and wait for some direction or something like that. And so then others kind of let everything else slide, and not address, some compliance needs. So to me, there's been two camps, very clearly. That's. And
I think that's when I said previously about this, taking this chance. I very simply said, we were going to be changing the jumbo engine at 40,000 feet. We could now change it at gate 34 at Heathrow. And that was my way of trying to get the team to understand you've got this window of opportunity where there's very little transactional effect going on that allowed you to do things that you would normally struggle to do in a in a very, very busy business where the phones are ringing and everyone's after you for everything. And GDPR is very similar. I'll tell you what's very, very interesting. We've just completed our insurance renewal, and two things have happened. One is we've had to fill in a huge amount around COVID and risk. So the questionnaire we've never had before has come up this time, and really detailed about what have we done around COVID, what have we done about our risk management, how we managed. And again, you talk about firewalls, IT, fraud, all of those things, GDPR, real detailed questions that the brokers are asking you before. And if you haven't provided that, you can't even get in to get renewals. So there's a focus coming. And then I don't think it's very public, but it will start getting more and more public. But the D&O insurance market is absolutely horrendous at the moment, horrendous. People are taking 200, 300, 400% increases in directors and officers insurance at the moment. And there's some real horrific stories out there in millions of pounds worth of uplifts for big companies. And again, that comes back to risk. You know, they're looking at companies that have gone bust, and some examples of fraudulent companies that have happened. And then they're looking at how your risk management is and whether you're updating with that to whether they're even willing to provide you D&O. So as a board of directors, the risk profiling is coming up higher, and actually it's going to be the point where you could be paying more for your D&O than you are for your terrorism or your property insurance. So it's actually happening, and I think those that have just gone, I'm only going to, we all understand the firefight. The firefight was cash. The firefight was what money have we got to survive at the point where our business is shut overnight. But as you come through that, you've actually got to be looking at, actually as directors, what is your responsibility? And as I say, when I talked about statutory accounts, how do you get your statutory accounts signed off? What are the challenges? And if you put your head in the sand, you're going to have a problem. If you engage with the professionals and you work through it, and it's the same with the risk profile that you're touching there, you know, in terms of, do you take that opportunity where it's easier to do it when there's no move in business and you can sit and say, right, let's go and make sure we've got everything out of everywhere. We've got everything secure. You know, one of the things we did was a really detailed retraining to come back to work. We used Flow, and we went through the key training that everybody coming back to work needed. People have been on furlough for 5-6 months, and then you expect them to come back day one and remember the controls that we've asked you to put in place before you went on furlough. But actually, we don't know what individuals' circumstances and challenges have been through that period from March, but they're going to come back, and they're going to come back in August, September. So we set about a really clear retraining program. So when they came back, they had to complete certain modules before they could come back and start serving guests, etc. And again, that's where your GDPR and your PCI comes in, because you ensure that they're refreshed, because it's in our mind and we're talking about it every day. But when you've been at home for 4 or 5 months, is it really something you remember? So again, it's that duty about actually, how do we retrain? How do we get you fit to come back to do the job we're asking you to do? Even if it is for 1 to 2 days a week, you still need all the tools that you needed when you were in the business in February and March.
It's a bit like coming back after Christmas, Paul, isn't it? Oh, what is my password? That's the first thing. Yeah, right. Oh my God, what am I doing here? So you brought up insurance.
I would say talk to your IT guys on the call and ask them how many of those calls came in day one. Exactly. What was my password? It's probably the biggest thing on a help desk for the first few weeks.
Yeah. Well, the other thing is, I heard an IT manager said to me something like, well, it's the chance for us all to defragment our hard drives. So you brought up insurance, and Jane, you've got a question about insurance, and more specifically business interruption insurance, if you're still there. Jane?
I am indeed here. Yes, thanks, Carl. I've just been getting a number of queries from hoteliers on insurance and whether they claim any business interruption. And obviously that is dependent on their own policies. And I realise that that's a very sort of general question for a very specific answer. But it's just sort of querying on how, what you've been able to claim, if anything at all, Paul, or if you've got any advice for people that have got some policies.
Yeah, I mean, we have claims outstanding. We logged our claims right at the beginning. So before initially day one, we worked with our broker and we provided all the details. So our claims for the BI element of that and the property. So we've got a number of claims that have been logged, and we participate in, and Mishcon have got a group which you've probably seen a lot of communication around. Small SMEs can work with Mishcon as the lawyers. They're actually been independent to the big brokers that have gone in against the major insurers. If you want my opinion, I think this is one that's going to be extremely difficult to win anything. And that's a personal opinion, that's not a company opinion. I think the lawyers will throw every single route they've got for every single way to get out paying for this. And the only way I see it ultimately being successful is if the government get behind and underwrite the insurers for this claims. Because the wording of, the one thing that when we were asked by the government way back in March, what were the certain things we required? We wanted furlough, we wanted business rates reduction, we asked for VAT reduction, etc. We asked for COVID to be announced that it was a pandemic because that would help the insurance claims, and they did. But then you see every single different insurer is trying to wriggle out of that. So I think it's going to have a lot of turns, and I think there's going to be a huge amount of money spent. And I do hope that some people are successful, but it's not the golden egg that I think is going to come around to save everybody, unfortunately. I think the insurers have got so much to lose that they're going to throw everything in it. And, I think when the FSA came to court, they had one barrister and the lawyers had 8. So that leaves you, the one guy is going against 8 of the most senior barristers in London to try and win the case. And yes, they've been successful in certain things, but I'm not very hopeful, unfortunately, Jane. I'd love to be, because that money would be gratefully, our investors will be very happy to have that kind of payout to help them get through the next 6, 9, 12 months. But I think even if we are looking for payouts and they do get successful, it's going to be a long time before that kind of money starts coming through.
Yes, that's pretty much what I've found as well. I've heard 2 stories in particular which stick in my brain. One was a company that had pandemic insurance, but because COVID-19 wasn't a named pandemic, it wasn't valid. And another one where they also had disease insurance, or an element for disease, but because the disease hadn't affected their operation, because their own staff weren't infected, then they weren't paying out on that as well. So, but I do agree with you, the claims are going to be so high, they're not achievable. They're not.
I mean, the first communication we had was, can you prove that somebody within 2 miles of your hotel has got COVID-19? And you start to get in those conversations, and you're like, really? The government shut the country down. It's got irrelevant if there's someone that close or not. The government shut our hotels. They told us we can't open. And so that's why I'm probably in the negative side of whether it's going to succeed or not. Where I think before, when we've dealt with things, and I know that we're party to the credit card case that's currently going through at the moment, I'm far more optimistic of getting a true result from those items than I are from here. I think this is one that's just going to roll and roll and roll unless someone somewhere steps in and stops it. Because I just think the only people going to win out of this is the lawyers.
Okay, slight different angle. Rob, you've got an interesting different angle on finance staff. Would you like to ask Paul your question?
Yeah, just to pick up on your point, obviously, reduction of staff at unit level. Do you see there's an increased need now for a stronger internal audit function?
I do, because I think, and it's interesting, we've actually just appointed a group internal auditor and risk manager, and that comes back to a bit Daniel said, this person will actually be doing the GDPR audits internally with us as well as HR and finance. So they're going to be doing all the audits. But so we've looked at that and said that's a risk that if we're going to have to reduce our manning levels at certain points, we need to have that control mechanism in place. So we're actually, Rob, we're totally down that route with you. And I think everybody has to look at all of the controls they've got and which ones are mission critical, which ones where you say, actually, can the system now do that? What are my checks and balances, and how do we work through those checks and balances? And that's the process we did when we started the project about the integration. Was it's fine if everything's been integrated, but how do you check the balancing of it all, and what's the processes? And as we look through, as I say, knowing that we were going to have to reduce our staff and we were going to have to move some of the processes and automate some of the processes. So we've consciously gone out and brought in an internal auditor for that reason. So it's one of those where, fine, we're willing to do X to reduce the headcount, but actually we need to increase this, and this is where the risk is. So by bringing in that kind of internal audit function, you've got that checks and balances, and you've got that ability that you've got another set of eyes in the business. So it's probably like, I'm willing to give you 100, but I need 20 back, because that 20 has got to be the control mechanism I need. So I think you've got to be strong enough in how you present it, and you look at your risk and your reward. And I think internal audit is going to definitely come in. And I think it's a challenge to say, what's the key controls, and how do you, if you haven't got the people to do them, how you get a plan to not, to mitigate that risk. And I think that's probably one of the things everyone's got to look at.
Okay, good. Well, on slightly on that topic, Alex from Agilis says, Alex, yeah, are you still with us, Alex? I can't quite see you. Had a question. Alex, well, his
I am
question...
just about. Well, I've got I don't have a very good signal, that's why I
That's
jumped
right.
up the question.
No problem. Would you like to ask your question, because I think it's relevant to the last couple of questions as well.
Yeah, Paul, conscious that the government has introduced the new policies with regards to no contact and with regards to social distancing, but we're also very mindful of the fact that the market has driven the requirement now to look at things like self-service applications. And something that I used a number of years ago was the Wetherspoons app, whereby I can wander into a Wetherspoons establishment and have myself a really nasty cheap beer. But the reality is I could actually order it and have it sent straight to my table using an iPhone or a mobile device app. Are you being pushed by the franchise owners with regards and the brands to look at that type of thing, to allow your operations to service more effectively, and also to protect your staff and to enable the social distancing and to give a different experience?
In ways, yes, and in other ways, they're not so restrictive into it. One of the things that we've been fighting for a long time was the self-service check-in, and the brands have been quite held back from really making that happen. And one of the things that's come out from COVID is that they've all now engaged far more in that. And different people have got, I mean, Hilton, we've got our 3 DoubleTrees have all got digital key, and that which has been great, and that Hilton are rolling that out. And different brands have got different experiences. Both of our ACs have digital key. Again, the take up is still not huge, but we've got that technology in place. So there's been that route between the digital key and the check-in, and certainly I think the barriers from the brand saying that's not the guest service we want to offer, I think that's been broken down. And I think we found that that's definitely come down, and there is going to be far more engagement, and the brands are going to develop the technology better to allow that to happen. And we're not all going to have as many staff as we had before, so we're going to need to have that technology. In terms of the food and beverage, the brands, all 3 of the brands are less descriptive of what you need to do. And how you do it. So they've got offers out there, they've got technology which we can use, and they work with partners to allow a number of that to do. We also look at who are our EPOS providers, and we tend to engage with them to give us the ability to provide and to use their mobile apps and the mobile devices. So we've tended to go down the route more of who our EPOS providers are, HFTP and people like that, to say, well, actually, what can we do and how can we take out the contact from that point of view? So you say the front office and that PMS driver, the brands have been much, much more engaged in. And as I say, the second side of it really has been, actually, we've driven a lot ourselves. And then if they're comfortable with an app or something like that, they would then come through and recommend how to use that. The biggest thing is Ihg Connect, which is the package for all of the Ihg hotels. A lot of that's going to go with that suite, is going to allow you to do a lot more of the ability for the guests to be able to order everything and pay for everything within that suite they've got. And probably the most advanced of the brands at the moment in terms of how their IT is all connecting at this point.
Okay, one maybe last question, Paul. You talked earlier about the dynamics of different hotels and the way the business ones and the ones coming out of being hospitals and the rest of it. And I think you mentioned at the Hangout in May that you were working on a big, I'm going to say big data or sorting your data out. Are those two things connected? Did you bring all the data in and then categorize the hotels by their behavior? Is that all part of the same thing?
Yeah, we do, as I say, we tend to look at, we don't formally say they're in buckets of what they are, but we've got some real dynamics from when you look at our Hilton Garden Inns, Indigo, and our AC by Marriott. They have a lot of the same dynamics compared to then some of our bigger conference hotels. So we do look at them in certain ways. We look at the resourcing, but we also look at them in forecasting. And we benchmark them against each other because the dynamics are so similar. As I say, when you look at our Harrogate hotel and our Glasgow hotels and our Stratford hotels, certainly the Harrogate and the Glasgow are connected. You know, they're walkways between some massive conference environments. So those things they're very much in the same bucket as with both of them have been taken over by the government for the conferencing to become Nightingale style hospitals in terms of, the hotel and the campus that they kind of live on is massively affected because there is no M&E at all. And, you know, so we've been working with the NHS to support them if they need accommodation needs. But so those markets we're looking at, and when we guide them in budgeting, we're giving them very much guidance because of what's happening. And until the government release this space and then it gets reconverted back into meeting event space. So even if it comes back in March, where the government say we don't need it for Nightingale style hospitals, it's still going to be a month, 2 months before it can then be back operational as SEC or the HICC or the NEC or Millennium Stadium. All of these things we don't think about, but they're basically just out of, you know, they are out of use, and the businesses that feed off those. So we have to look at those as different buckets to pure corporate to pure leisure. So that's why we look at it. We don't have the big data scenario with the customer mix because they're different brands. So a lot of that affects around the brands, but we do look at them and compare them financially for KPIs and forecasting, etc., because of the dynamics that happen and, you know, they lead into events, etc. You know, we're looking 2 to 3 years out plus sometimes for some of these big event bases. Yeah. And the cycles of those events when they come.
Okay, great. I can't believe another hour has whizzed by. Paul, thank you for that masterclass. Absolutely fascinating. Now, before I hand back to Victoria, I'd just like to remind you all that our next Hangout is on Wednesday, the 21st at the same time, 3 p.m. UK, 4 p.m. European, and whatever time in the morning you're getting up in the US. The topic in 2 weeks' time will be the new Wi-Fi 6 standard and how it's going to affect the future of wireless in hospitality. It's some very interesting aspects. Some of the things Paul talked about of brand standards comes into this as well, and how this will affect all of our guest connectivity expectations. For example, how it will affect the infrastructure, and there's all kinds of other numbers that come with technology and wireless, like 802.15.4 and things like that. It's even worse than finance for all kinds of 3 and 4 letter numbers. So we will see you in 2 weeks' time, and in the meantime, I will hand back to Victoria. Victoria, over to you.
Oh, thank you so much, Paul, for the great Hangout today, and always thank you to my team member, Carl, for producing today's Hangout. Finally, thank you for all of you for taking the time to join us today for the Europe Hangout. Before we close, as Carl mentioned, our next Hangout is Wednesday, October the 21st. The registration link is already open. And also Cyber High Tech. October 27th through 29th live with all the best aspects of high tech, keynote speakers, education sessions sourced by the Cyber High Tech Advisory Board, and great hospitality technology exhibition, including one of our High Tech Europe special sessions on Wednesday, October the 28th, Tea and Technology with Barry Thomas or Rosewood Hotels. Thank you again for joining us today, and we hope to see you here again on Wednesday, October 21st. This closes today's HFTP Europe Hangout.